Yeah.
That's a possibility.
Business owners are a kind of special case in that regard. They do have definite advantages over regular W-2 earners in that they don't just transfer assets to provide income for the child. They can actually employ the child. And as you know, if you do that before the age of 18, then you don't have to pay Social Security and the unemployment tax for the child.
Right. Okay, we need to move along. What kinds of savings vehicles are available to help families provide for their children's college education?
The idea of the savings vehicles for college is that the earnings on them shouldn't be taxed, should be tax-free if the money is used for college. So typically you take after-tax money and you put it into one of these accounts. It grows, hopefully over many years, and grows considerably. And then you take that money out. If you use it for college, you don't pay taxes on the earnings growth.
Right.
So there's a couple of variations of it. There's something called a Coverdell Educational Savings Account. That's actually good because you can actually spend the money on K through 12 schooling.
Yes.
So you could use that money towards private school costs. The big one, though, is 529 plans. They're specifically for the higher education expenses. You can put a fair amount of money into them. You can put a couple of $100,000 of money into them. You can use them for one student, then roll the remaining money into the next student, and so on and so forth. Other than that, if you're saving outside of a plan like that, there's the old uniform transfer, uniform gift to minors type accounts.
Okay. Before we move into that, I want to mention there is an election that's available related to the 529 plan. So you can, I believe it's where you treat it as if it was over a 4-year period?
5-year
period. So 5-year period. But you had to file a gift tax return in order to make that election. So, so if folks, you put some money aside for your children or grandchildren into one of these 529 plans, and you're putting a big slug in up front, you can get this, the exemption right now is $13,000 a year, and treat this as paid over that 5-year period. So you could put like over $60,000 in.
That's it.
For each grandparent. So, so anyway.
Yeah. So here's a strategy specifically for grandparents. If if the child comes out of college with some debt, and the grandparents have a 529 plan that they've been keeping and saving, they're not on the financial aid radar at all. So they can then use that money, maybe gift it to or pay off the student's debts.
Right.
Yeah.
So that could be something that helpful that grandparents could do.
Yeah.
On the 529 plans, one other point, and then we need to move on, and that is that you can actually change who the student is that benefits. So in other words, if one of the children, you make one of these plans for them, and they decide at a later time that they're not going to continue for college, then you can give it to brother or sister.
That's right.
Or something like that.
And even yourselves, if the parents go back to school at some point.
Yeah. What do families need to be aware about gift to minor accounts?
Those are a problem from the financial aid point of view. And the reason is that the assets held in the child's name are counted at 20 or 25%, depending on type of college. So if you had $10,000 in a child's account, it would count for $2,000 against financial aid. If that same $10,000 was in a parent account, instead of $2,000, it would only be $560.
Wow. Okay.
So, having said that, again, if financial aid isn't on the radar, probably the advantage to the Uniform Gift to Minors accounts is the investment flexibility. So you're not limited in how many times you can trade in such an account if that's the kind of thing you want to do.
Yeah. So you just need to be aware that it's an issue if you do have financial aid, and you're trying to qualify for financial aid.
Right.
But if it's out of the question, then you could look at the other alternative. Again, having the income tax on the child's tax return means that you're getting towards that more than 50% support and all the other things that we were talking about.
Right. So the only if you might get financial aid and you have a UGMA account or something like that, you need to try and get rid of it before that base year for financial aid.
Okay. Yeah. What tax deduction is available for student loan interest?
Up to $2,500. And again, there are phase out. I think it's $105,000 to $135,000. The thing that people don't realize about student loans is that if the student takes out the loan and the loan's in the student name, the student is the one who has to claim the loan deduction. And if they're not filing a tax return, they're not going to get. The parents won't get it.
It's a wasted deduction. Yeah.
Right.
Okay.
But the way most student loans are set up is that the student can defer the interest until after they leave college. Then they start paying the interest, and by that time, hopefully, they're earning, filing tax returns, and then can take that student loan interest
So we only
deduction.
have about a minute left. I have a question here, though. What are the rules that apply as the sources of funds to be used for paying various education expenses? That might be too big one.
Well,
But maybe if we can hit a few highlights.
The highlight there is no double dipping. So you can't pay the same expense with a grant and a 529 plan and so on and forth.
Okay.
So there are rules that can make it difficult to use all of that money in a 529 plan. That's a little warning.
Yeah, you have to watch that. Okay, so we got about a minute left. So are there any highlights of any other issues maybe that you want to bring up before we wrap this thing up?
It's more difficult for higher net worth parents to benefit from financial aid, and therefore they have to look outside the box. There's no silver bullet in this kind of thing. You want to maximize efficiency of all your resources, and don't forget the tax, the tax benefits.
So look to the details. But you have to be aware too that an awful lot of these things, unfortunately, for the much higher income families, over a couple $100,000, is just, they just get phased out, unfortunately.
Yeah, but there are things that could be done that. I hope they're not just going to give up and just write checks.
Yeah, well, and there is the thing too, like we said, we'll have the child qualify, for example, for claiming those credits. So maybe mom and dad couldn't get it, but maybe the child could.
Yeah, that's it.
Okay. All right, well, I want to thank you very much, David. Thank you for being my guest today.
My pleasure.
For sharing this important information with us. Folks, good luck in getting those college expenses covered. And I hope I'll see you next time in Financial Insider Weekly.